Well, hi guys, welcome to this Money Control live stream. It's a Monday morning and you're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, lots of cues to digest, global cues looking fairly strong. And of course, we have a very big corporate development as well. And we will be focusing in on Uday Kotak's resignation 4 months ahead of its term end. But of course, we'll also be getting all your stock-related queries answered by our expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before all that, let's take a look at the top headlines at this hour. Wall Street ends mixed on Friday, but the Dow clocks its best week since July. In fact, unemployment rate in the US rises to the highest level in over a year and the economy adds more jobs than expected. This morning, Asian markets are largely mixed, with the GIFT Nifty signaling a higher start for the Indian market. Oil continues to rally. Brent crude edges up to nearly $89 a barrel as Russia agrees to cut oil exports. Meanwhile, Saudi Arabia is expected to continue with production cuts into October. A higher than expected fall in US oil inventories also push up prices. Uday Kotak steps down as the MD and CEO of Kotak Mahindra Bank 4 months before his term ends. Deepak Gupta takes over as the interim chief. Talking about the surprise move, Uday Kotak tells CNBC TV18 his decision to step down was completely voluntary. He also says the bank has sent names of 2 candidates to the RBI for a smooth transition and is awaiting approval. Among auto sales figures that came on Friday, Royal Enfield's August sales come in higher than expected at over 77,000 units. Hero Motor, meanwhile, reports a 5.6% year-over-year growth in sales. And lots of stocks in focus. BSE revises Jio Financial circuit filter to 20% from 5%. Reports suggest Tata Steel may be in advanced talks to secure funds for UK plant. And Biocon has made a new acquisition. We'll get you more on that as well. But let's talk about the big story at this juncture. Obviously, in the banking industry, Uday Kotak has resigned as the MD and CEO of Kotak Mahindra Bank 4 months before his tenure actually ends. Before we touch base with Latha Venkatesh and figure out what it really means for the bank, let's listen into what Uday Kotak had to say. In fact, CNBC TV18's managing editor Shireen Bhan caught up with him over the weekend, and this is what he had to say.
Kotak Mahindra Bank now has more than 100,000 employees as a group. As you know, we started this in 1985 with 3 employees, 300 square foot office space in Flora Fountain, Mumbai. And we've come some ways over the last 38 years. I see the strength of our management team, the depth of our institution as quite outstanding. And I'm very confident that the institution, Kotak Mahindra Bank, which I'm also very proud, is a majority Indian-owned institution, will play a major role in the future of India.
Well, let's now bring on board Latha Venkatesh, who's the executive editor of CNBC TV18, to put into perspective what this exit really means. Good morning, Latha. Great to have you on the show as usual. But, 4 months ahead of his tenure ends, actually, we've seen Uday Kotak tendering his resignation. Do you think this move comes as a surprise or, or the street was really ready for this and it really isn't that big a surprise?
There's a surprise because one was expecting him to continue till December 31. But for the life of a bank, what's 4 months? People were anyway expecting that he would, resign or his term ends on December 31st. That he has done 4 months earlier shouldn't make any difference to the valuation of the stock. In any case, the stock hasn't done much. Like IDFC Bank, these 2 stocks have been quiet. They haven't participated in the huge financial rally and then the slight fall that we have seen in recent weeks in the Nifty Bank. They participated in neither of that. So I don't think there's much in this for the stock to move. The uncertainty over who is the next, all that continues. That was what it was last week. That is what it will be this week.
Right. Does his appointment as a non-executive director really align with, what the regulator had to say, given the fact that we did see him drag the regulator to court over, reducing his stake and his tenure as such. But do you think this really aligns with what the RBI really...
well, again, this is not market related now because he was selected, a month back or even earlier.
Right.
And therefore, it's not stock moving at this point in time. Not even 1 month. I think it's over a couple of months. Now, if the Reserve Bank was on firm legal ground or was unhappy, it would have moved legally. I think the law allows for such an appointment, although the RBI regulations frown on it. Now, regulations are subordinate to the law.
Right.
So it's quite possible that the Reserve Bank didn't want to push the law, or for whatever reason did not proceed. So yes, it is definitely not what the Reserve Bank regulation said. They want a person who has been MD and CEO for 15 years to take a cool-off period, for 3 years to not be directly or indirectly associated with the bank. There is that regulation, which came in, I think, August 2021. But since the law with his 26% stake and the Banking Regulation Act allow perhaps for the stake, they haven't pushed their case. Therefore, again, this, you can talk both sides, but it's not going to impact the stock now.
Right, and talking about the next successor, of course, there are two contenders, and as Uday Kotak has indicated that their names have already been sent to RBI for approval. But what are the chances of an outsider coming into the picture?
If it were 3, then people would have thought that maybe there will be one outsider in that list of 3. If it is 2 that they have sent, then it's quite possible that the 2 contenders are Mr. Manian and Shanti Ekambram, who are already at the helm of the bank. So if that is the case, then for the market, there's no change. Both of them are prodigies of Uday Kotak. And chances are that it will very much run with just them signing off on the loans, etc., and Mr. Kotak being some kind of an advisor. Then it will be business as usual. This 2 was a bit of a surprise, because I think the market was expecting that a list of 3 will be sent.
Right.
So now it looks just a little less likely that there can be an outsider. Now, if both of them are inside, it's very speculative. We just don't know who those 2 people are. To think that, there could be an outsider there, or there is no outsider, will Reserve Bank ask for an outsider? I think we can't speculate that much.
Okay, ma'am, over the period of 35 years that Uday Kotak has been a part of the bank, any key takeaways that you have, given the fact that you've been tracking the banking sector for quite some time?
Well, you can't deny it's an outstanding performance. 38 years in the financial sector, but 20 years as bank, because they get the license in 2003. Yeah. So it's 20 years as banker, and it's almost a smooth run. Right. They have never given any headaches to the regulator in terms of high risk, even when there was those NPA issues in big banks, from 2014 to 18, asset quality reviews. You had big banks like ICICI and Axis also report close to 10%, 8%, 7% NPAs. But Kotak, like HDFC Bank, was always a clean bank. So he's been a very conservative and careful lender. Perhaps you can point out to that as a bit of a minus. HDFC Bank in its 25 years in existence, 28, 1995 they come into existence. In the first 15 years, they grew at 25% practically, CAGR. And in the 2010s to now, they have been growing at 20 to 21%. Whereas Kotak Mahindra Bank has been largely growing at around 15, 16%. So clearly a more careful bank. Both of them are lending to the same market. So if this fellow can grow at, between 20 and 25% in this decade, last decade, why is one bank growing at a slower pace? It's clearly a more careful bank. So maybe you can say that it's not a growth oriented. It's 11th in the list of Indian banks in terms of size of deposits. So at what percentage? I think they are about 3.2 lakh crore in terms of advances and 3.8 lakh crore in terms of deposits. That would be, about 2% or less of the total deposits in the banking system. So it's not a huge bank in terms of moving the needle, whereas HDFC Bank could do it, although it is only 8 years older. You may point that as a negative, but you can't complain. Shareholders of Kotak Mahindra Bank have been richly rewarded, extremely well-run bank, despite the differences of opinion with the regulator.
Yeah. Well, I think, Latha, we'll leave it here at that. Thanks a lot for taking out time and putting things into perspective for us. As always, it's lovely chatting up with you.
Thank you.
Well, with that, let me also bring on board our technical expert for today. Joining us is Rajesh Palviya of Axis Securities. Rajesh, great to have you on the show. We have had a great start to the September series. Do you expect that momentum to continue and perhaps the Nifty reclaiming that 19,500 mark in today's session?
Good morning, Nandita. So, month of August was a little sluggish for in terms of large cap space as well as for the both the indices, and we have seen throughout the August series there was a corrective move. The beginning of September series was on a light note in terms of open interest, but the first day move on the both the indices was clearly indicating that market is very much ready to again show further more bullishness from the current level. Both the indices have witnessed the long built-up setup in the previous session. Nifty again has witnessed short covering action in the previous session. Most of the call writers, those who have sold call for 19,300, 400 strike, they were covering their position as Nifty has shown good traction in terms of buying, and most of the large cap space have done well. Yeah, we do expect that, yes, Nifty can scale up to the level of 19,400, and once we able to cross and close above 19,500, then possibly another round of short covering action may trigger in market, and then Nifty can move further higher towards 19,650, even 19,700 in the continuation of this pullback. So overall, we expect this bullishness is likely to continue further for the current week, and possibly Nifty may head further higher towards 19,700. One should buy and accumulate Nifty with stop loss of 19,280. That's the stop loss one can keep, as most of the put writers are now taking their position at 19,200, 19,300 strikes. So these area is likely to act as a good support area. For Bank Nifty, yes, there was a long build up, and now Bank Nifty again managed to hold above 44,000 level on a closing basis, and looking at the short covering action in the previous session for most of the strikes, now we expect that Bank Nifty, if crosses above 44,750, 800 zone, then this rally can extend towards 45,000, even 45,200 also. For Bank Nifty also, we are bullish. Keep your stop loss at around 44,150 to hold your long position towards target of 45,000.
All right, that's the those are the levels to watch out for on the Nifty and Nifty Bank. But we're since we are talking about banks, let's talk about Kotak Mahindra Bank once again on the charts. I'll come to you on that. But Jefferies has come out with a note on Kotak Mahindra Bank. It has a buy rating, the target price of 2,400 rupees per share. In fact, it has noted that Uday Kotak has resigned 4 months ahead of his term, and he will be acting as the non-executive director for 5 years and stay as a promoter of the bank. And Jefferies has noted that a smooth transition under the new leadership will be key for the stock going forward. Of course, the stock hasn't done much because this, succession has been a big overhang on the stock performance. If you look at the stock chart over the last 1 year, it has been in the negative compared to its other private sector peers. But on Friday, we saw good volumes on the counter, and 1770 is where it's at, Rajesh. Where do you expect the stock to head in today's session? Would you say that there could be some bit of a reaction to this bit of news that's there?
So, Nandita, 1800 is very important level to watch for in today's session. If at all stock crosses those levels, then some short covering action we can witness during the day. As most of the call writers are having their position at 1800 and up to 1900 strike. So most of the call writers are still expecting that the stock may not perform on the higher side. So in today's session, if it's processed above 1800, yes, one can see a short covering action towards 1825 to 1850. That is the next level where stock can move further higher. On the lower side, 1750 is the key important support area on the downside. If at all stock breaks below 1750, then the down move which we were seeing in the stock can continue further, as the stock is still trading below to all its near-term, short-term moving averages. Stock is already trading below to 200-day moving average. So major resistance area is 1800 to 1850. That levels needs to watch in the today's session. If we crosses those levels, then yes, short covering action can take stock further higher.
All right, that's the view then on Kotak Mahindra Bank. But let's also talk about the stock of the day, IDFC First Bank. There was a block deal in the stock, and now it's come to the fore that GQG may have bought a stake in the bank. Somewhere around 6.38 crore shares at the rate of 89%. Now the stock is near about its 52-week highs. 93.2, but 52-week high somewhere around 95.8. Would you expect levels of 100 rupees anytime soon in the next couple of sessions, given the fact that, GQG stake buy did revive sentiment around Adani group of stocks? GQG buying stake into the counter comes as a big positive for IDFC First Bank.
So surely, this is the sixth consecutive month where we are seeing that there is a strength in IDFC First Bank, and there is a sustained buying action is taking place. Stock managed to give breakout of its multi-year breakout level of 84 that was in 2016, and now stock is enjoying above that breakout level. So looking at the overall setup on the across all time frame, yes, we are holding our bullish view for IDFC First Bank. And we expect that, stock may scale up to the level of 100 and beyond 100 level also. One can hold their long position. Even in decline, one can add and accumulate the stock as across all time frame stock is showing strength. So your stop loss to buy and accumulate on the decline also is towards 84. On the higher side, 105, 110 could be the possible target in the short term.
Right, that's the view then on IDFC First Bank. But let's talk about Jio Financial, given the fact that, BSE has revised the circuit filter from 5% to 20%. Recently, of course, on the first, we saw the stock exiting the BSE indices as well. We have a couple of queries on our feed on Jio Financial as well. Naveen wants to know, the target on the stock. I know it's a recent listing, not much data to look at, but what would you advise investors to do with the Jio Financial at this juncture?
So stock has marked almost low of around 200, 202, and from there we have seen a strong buying action in the stock. So stock has not much in terms of technical data, but looking at the buying action in the last couple of trading session is clearly showing that everybody is chasing this stock, and yes, we expect this momentum can extend further towards 265, 270, also in short-term basis. So those who have already bought at lower price, they can hold their position. Now trailing stop loss should be at around 232 and upside target 265, 270.
All right, that's the view on Jio Financial then. But let's take up some more queries that are trickling in this morning. Rupak Mehta wants to know if it's a good time to enter into pharma stocks. And if yes, he wants to know which stocks would you recommend with a medium-term perspective?
See, most of the pharma stocks has shown a good amount of rally in last couple of months. Now, most of the stocks are consolidating. Yes, if your horizon is for medium-term perspective, yes, you can buy and accumulate these pharma stocks. As you are seeing that, corrective move, most of the pharma stocks are showing some profit taking and corrective move after this rally. Yes, we expect for one can buy and accumulate for next couple of weeks. The stocks which we like from pharma space, that is Lupin, Aurobindo Pharma and Sun Pharma. These three stocks we like from the pharma space, and we expect that once the consolidation is over for all these three stocks, they can exhibit furthermore bullishness going forward. So Lupin, one can buy and accumulate. Your stop loss should be at around 1020. For Sun Pharma, your stop loss on the downside should be around 1050. And for Aurobindo Pharma, you can buy and accumulate this stock with stop loss of 770.
All right, hope you've taken note of those names that Rajesh just mentioned. Let's also talk about the metals pack now, Rajesh. Metals as a pack has been buzzing, shining bright, so to say. And we have a query coming in from Shivnath Sarkar. Wants to know your thoughts, particularly on Nalco and other metal stocks. How would you, do you spot a trade in some of these counters now, Tata Steel, Nalco, given the fact that they have clocked in smart gains, at least over the last week?
Yeah, definitely. So most of the metal stocks have done well in the last week, and we have seen a good amount of rally in most of the metal stock. Yes, one can hold their long position, or even they can buy at current market price also. And we expect, yes, some of the steel stock like Steel Authority has also given a breakout. So this stock we like at current juncture, and we expect that now this time sale can scale up to the level of 105. So one can buy sale also with stop loss of 93. Another stock from, yes, as you mentioned, National Aluminum, yes, stock is also looking promising. Stock has given a breakout of last 4-5 week consolidation range, and stock managed to give breakout of its previous swing high. Looking at the buying action in previous week, yes, we do expect that Nalco can continue further upside towards 108 to 110 in short term. One can buy and accumulate this stock with stop loss of 93. Another stock, Tata Steel, yes, one can buy and accumulate this stock also. Most of the metal stocks are showing strength, and Tata Steel now comfortably holding above to its breakout level of 124. So if it's hold above 124, then possible target on the higher side towards 135 to 140. So Tata Steel is also buy with stop loss of 124. So yes, we are expecting that metal stocks can exhibit furthermore upward momentum in coming trading sessions.
All right, metals can, display upward strength as well going forward. But let's talk about Tata Motors vis-a-vis Maruti. Pooja Mehta wants to know your thoughts on Tata Motors. Stock is close to 52-week highs, but if you look at Maruti and M&M, they've both hit record highs last week. Among the three, which is the one that's looking most attractive on the charts now?
So if you are looking for trading perspective for very short period of time, then Maruti and M&M is looking more promising compared to Tata Motor. As Tata Motor is in consolidation, so it may take time to show immediate upward momentum. But yes, Maruti and M&M can continue furthermore upside, as Maruti is now enjoying almost all-time high trajectory. And looking at the breakout in previous session, we expect that Maruti can continue furthermore upside towards 10,600 to 10,700 in the continuation of this trend. So you can buy Maruti with stop loss of 10,150. M&M is also looking very promising. Almost stock is trading near to 1600 mark. Looking at the overall setup, we expect that M&M is a stock where you can buy for trading perspective as well as for positional perspective. Our trading target for M&M is towards 1640, 1660. But positionally, we expect that M&M can move further higher towards 1750, even 1800 in next couple of months. So M&M is also looking very promising. Tata Motor is still in consolidation. So if your horizon is a little longer, then you can buy and accumulate Tata Motor also, as stock is already showing strength on the longer term time frame, but on the near term, some corrective move is taking place. So in decline, you can add Tata Motor towards 590, 580. Keep your stop loss at around 570. And upside, once the stock crosses over 640, then this stock can also move further higher on a positional basis towards 700 to 720.
All right, hope that answers your query on Tata Motors. But let's take up one last query then. This one is coming in from Meet Jaitley. And he wants to know whether or not it's the right time to enter into a Ruchira Papers. Now, this stock was up 6.5% on Friday. Should one look at getting into this counter now?
So, Nandita, most of the paper stocks have done well in last couple of trading sessions, and most of the paper stocks are showing that strength. We expect paper segment can do well, and Ruchira Paper, yes, it's almost on a verge of giving breakout of its previous swing high of August itself, and then if the stock crosses above 156 mark and hold and sustain above those levels, then possibly this really can extend towards 170, 75 also. So if you're bought at lower price, your stop loss should be at around 142 to hold your position. Do watch of 156 level. If it manages to cross, then hold for the next target of 170.
All right. Hope that answers your query on Ruchira Papers. But with that, Rajesh, we've come to the end of the query segment. But before I let you go, any stock recommendations for viewers this morning?
So, Nandita, in last session, most of the PSU stocks have done well, especially in power sector also. We have seen good traction. So, NTPC is looking very promising. The breakout is already evident on the weekly chart. So, we expect that NTPC can continue furthermore upside towards 238, 242. So, NTPC is buy with stop loss of 226. The second stock which we like, that is from hotel segment, that is Indian Hotel. Indian Hotel has done well, and if we analyze the overall setup for Indian Hotel, the stock has given a strong breakout on the weekly chart, and the breakout is clearly suggesting that one can buy and hold Indian Hotel for upside target of 460, 470 also. The stop loss for Indian Hotel is around 406, and the third stock which we like, that is LIC Housing Finance. Stock after a corrective move, now stock has started recovering, and now stock has managed to give breakout of last 3 week supply pressure. Looking at the breakout on weekly chart, we expect that LIC Housing Finance can move further higher towards 455, 460 zone. So one can buy with stop loss of 420.
All right, 3 stock recommendations coming in from Rajesh, NTPC, Indian Hotels, as well as LIC Housing Finance. With that, Rajesh, thanks a lot for taking out time and joining in. As usual, it was a pleasure chatting with you. Look forward to having you again next Monday. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But of course, don't go anywhere, because coming up next is Opening Bell. Stay tuned.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.